All right, so welcome in, everybody. We're going to get into it today, all about what Chair Powell was doing yesterday in reference to a quarter point basis rate cut. It's going to be a good one. My name is Paul Barron. Welcome back into the show. Joining me today is Matthew Sigel, coming over from VanEck. You guys have seen him on the show before, but Matthew, welcome in.
Hey, Paul. Hey, everyone.
Nice to see you. And of course, now that we are past the FOMC meeting for September, we get a quarter point rate cut. Whether you were expecting it or weren't expecting it, what were you looking for out of Chair Powell yesterday? How did he deliver for you guys?
Yeah, the betting odds and the kind of options implied move by the Fed was kind of baked in the cake. So I don't think this should have been a huge surprise, but I think just how polarized the Fed has become, that there was maybe like a vocal minority that thought that Powell and the team would dig in their heels and not cut. And so what we have here is, I think, a relief rally, and the market's now implying 3 rate cuts by the end of the year, up from 2. So a little bit of a marginal tailwind on the liquidity trends, and should be supportive as we enter the more seasonably favorable part of the year.
Yeah, for sure. I want to share a story off of Reuters where they were breaking this down. One was this right here, and I'll zoom in on it for you guys. Powell tempered initial enthusiasm in the markets. This was really kind of on everyone on a more aggressive path toward easing. He also noted the softness in the labor market, which is interesting to me, that he's at least validating what we know has been a big problem. And then he's talking about reserves, which, but he's reserving a larger cut for more serious conditions. I mean, gosh, you've got jobs loss at all-time high, reports from the BLS. I mean, the only thing that could really go wrong now for the Fed is going to be higher inflation, which only exacerbates stagflation. How do you think Powell responds to this on the next meeting?
Yeah, I think what they were reacting to is the now clear deterioration in the labor market. And you heard some of the first questions in the press release centered around the high unemployment rate for young people and for people of color. So, to the extent this institution is politicized, those on the left are going to be very focused on the job market. And given that deterioration, I think it gave the chair cover to start on this rate cut, path. So there's a new Fed board member, which is Trump's choice. So on the margin, like, that will be helpful towards his preferred path of rate cutting. There's also, I think, a strong consensus that at 4.5%, monetary conditions were restrictive. And given where the inflation rate is, it may tick up a little bit, but clear deterioration in the labor market. Inflation's, still not rising, so why be accommodative? So I think, another quarter point cut in October is, a very good bet, unless inflation accelerates materially or the jobs market improves.
Polymarket is kind of interesting because if you look at Polymarket right now, this is how many rate cuts in 2025. And if you kind of hover over this right now, what you're dealing with is in between 3 rate cuts this year. So that would give us an October. Would that mean, in your opinion, that he bails out of a late year rate cut, or is it one of those things where he would come in and do maybe a boom, boom, boom? What is your thought of where these would fall into 2026?
I think that the next meeting, the rate cut is pretty high probability, and then after that, they're going to let the data decide. So I don't think that market participants should be making a strong call on December or even next year yet.
Well, it's going to be interesting because I think everybody's leaning into this because of the cycles that we've dealt with. When you look at the S&P 500 all-time high, gold now performing all-time high, Bitcoin, as we're talking today, nearing 118. I mean, we've got a lot of positivity in the market. Do you feel like this holds for now as a very boom-rich market as we move into September, October, November?
In the strategy that I run, we still have considerable exposure to risk, and we haven't lightened up on some of our higher beta picks yet. So, I'm focused on the Bitcoin market and the equities that surround it. And for Bitcoin, at least, we haven't seen the type of euphoria that usually marks peaks. So a couple of kind of tactical indicators that we look at how much does it cost to put on a leveraged position? So what are the funding rates in the perpetual futures markets, or to put on a leveraged position on the CME? And when those rates really spike, into double digits, that's an indication of strong euphoria, and actually the forward returns for Bitcoin deteriorate significantly when we're in that kind of double-digit funding rates. That's not the case right now. We also look at unrealized profits in the Bitcoin blockchain, so you can see when every coin has transacted and at what price. And when the unrealized profits are very high, that also augurs pretty poorly for forward returns over kind of 1 to 3 months. We're not seeing that right now. Now, one thing that I think I am on the lookout for is the AI trade, because many of the Bitcoin miners have been the best performing stocks this year. Some of them have doubled, tripled on the back of this AI convergence. So the Bitcoin miners repurposing part of their electricity capacity to serve the AI market. And the volatility on those stocks has fallen quite a bit, and they're starting to kind of show parabola in the shapes of their charts. So I wouldn't be surprised to see something like another DeepSeek moment that kind of creates some fear in the market and causes a bit of a short-term washout in some of those trades. And given like Nvidia's role in the S&P and the Nasdaq, maybe that has some knock-on effects. So I'd say that if I'm, I'd be more cautious around that part of the market, which is showing some signs of euphoria, rather than Bitcoin specifically. But given how the miners have become such a larger part of some of the crypto equity universe, that's something to look out for, I would say.
Yeah, I think, and obviously you're referencing a lot of what you guys are doing in the Node ETF. Now, here's a quick list of your current holdings around this. And within this right now, there's a handful of these that people would say, well, hey, mining has been volatile to your point. Is it time to pivot? I kind of hear maybe that there's a pivot here into some other risk assets, but how would you guys play this out?
Yeah, haven't taken down the exposure in these stocks yet. They've been great performers. There's still a valuation arbitrage from our perspective.
Right.
When you look at some of the pure play AI data center companies like CoreWeave or Nebius, they're trading, at more than 20 times their EBITDA. And when you look at the Bitcoin miners, they still trade at 3 to 6 times their EBITDA. So it still makes a lot of sense for these miners to continue to repurpose some of this capacity to serve the AI market. It's clear that many of the leases that they're signing are still ahead of us in Q4. We're expecting a number of announcements from some of our holders in terms of signing tenants for their AI data centers. So I still think this is a tremendous place to be in the market, and you can see from our exposure that those stocks dominate our holdings. But one thing just to note about this strategy, the VanEck on-chain economy ETF, the ticker is NODE, is that the volatility of this fund is about half of what you see from most crypto equity funds. When we designed it, we were taking in the feedback from many investors who want exposure to crypto via equities, but are just spooked by the high volatility of the pure play miners, the exchanges and the leveraged hodlers like MicroStrategy. So what we did with this strategy is really take a diversified approach. As you noted, the market's at all-time highs, Bitcoin's at all-time highs. There's no need to be a hero and take 10% single stock positions. We're going to, for now, stay very diversified and let the rising tide of AI and Bitcoin lift our stocks. And I'm very gratified that since inception, we've quadrupled the performance of Bitcoin, and yet we've done that with lower volatility than Bitcoin. So I can't promise that's exactly what will happen in the future, but it's exactly what we designed the product to do, which is give exposure to the adoption of digital assets. That happens to be through the AI hybrid Bitcoin mining space right now, but do so in a way where the 90% drawdowns that we saw last cycle hopefully won't materialize because we just don't have those huge positions in the leveraged names.
I know VanEck is very expanded into a variety of blockchain components. One of the big movers that we've seen has been Avalanche. This was kind of an interesting point right here on their TVL in DeFi, now starting to accelerate. Avalanche now starting to move in terms of the token, the potential for that market, because this could end up bringing in a lot of new investors, not only in the node fund, but in other funds under VanEck. Are you guys looking at any of those kind of scenarios that are playing out in the market right now?
Yeah, we like Avalanche. We hold it in a couple of our private strategies. In fact, my colleague Pranav, who runs Digital Assets Alpha, our liquid token hedge fund, he recently launched a purpose-built fund just to invest in the Avalanche ecosystem. So what Avalanche is doing with these subnets, which make it very easy and affordable for anyone to spin up essentially a layer one on top of Avalanche, customize their validator set. You can make it KYC'd, you can make it open. It's very inexpensive. It really gives a lot of flexibility for TradFi institutions who want to build on crypto rails. So nice to see AVAX catching up here a bit. It's actually the best performing layer one token over the last month.
I'm intrigued to see how this is going to play out. Matthew, what are you guys watching for right now? If you're looking at the 3-month window here toward the end of the year, is there anything that you're just keeping a very close eye on for the market as it stands today?
I think it still just goes back to the internals of the Bitcoin market. Are people super greedy or are they super fearful? And we're kind of nowhere near that greed markers. So we're going to stay constructive. I know it's easy to be bearish with stocks at all-time highs, but that's the nature of stocks, is that they tend to be at all-time highs as money debases and corporations grow. So margins for the Fang 7 are very high. They have great balance sheets. The fundamentals don't look anything like the dot-com bubble in 2000. So we've made some moves around the edges to take down some of our U.S. exposure a little bit at the end of last year. But I'm just looking for signs of euphoria in the crypto market and not seeing them yet.
All right. So do you think that is a 2025 event? Do you think we see the top this year, or do you feel like this rolls into next year?
We're going to have to wait and see, Paul. I'm going to let the markets tell me the answer to that. I still lean towards that the 4-year cycle has validity, that as we move into the midterms, the pace of deregulation may slow. There'll be some uncertainty around how that will shake out. Not all the elections have gone the Republicans' way in the last 6 months in terms of some of these special elections. So I'm on the lookout for that, but I think it'll be accompanied by more tailwinds first, is my guess.
Yeah. Well, that's good news. I think in general, it tells us today, guys, if you're watching the show right now, we are up again, and it looks like we are going to see an upward trend right here based on the tailwinds of what happened yesterday at the FOMC meeting, even though I still feel that Powell is a little bit hesitant for whatever reason. The real question, I think, is what will he look like at the next FOMC meeting going forward? So Matthew Sigel, make sure and catch him over on Twitter, of course, and follow him there, coming in from VanEck today. Thanks for coming out on short notice. We appreciate it.
Thanks, Paul. See you, everybody.
You bet. All right, so you guys, if you're not part of the Diamond Circle, I want you to take a moment right now and join. It's very easy to do that. All you have to do is click the link down below. It's going to take you over to the page. You can sign up. And what this gets you is our Bear Market Edge newsletter. It also gets a lot of the insights from us from our research that we do on hundreds and hundreds of hours a week that really dives into crypto as a whole. And of course, it's all free for you guys. So just check it out down below. Follow me out there on X at Paul Barron. We'll catch you next time right here on The Paul Barron Show.